Let's review where we stand here in the fear of interest rates backing up. We've already seen a 2-year Treasury note, which is a barometer for the direction of short-term interest rates in general. That is closing in at 3.8%. Now, some mortgages, not all, are attached to that, but 10-year notes were also backing up. In other words, interest rates across the board, over which the Fed has control and many others over which it does not, are backing up to the degree we've not seen in the case of, let's say, a 2-year note. We're showing you a 10-year note right now, but something we've not seen since 2007 in the case of the 10-year and years itself. Now, the 10-year is an interesting one because a lot of mortgages are attached to that. And going into today, a 30-year fixed-rate mortgage was hovering just under 6%. Mortgage rates have been climbing. This guarantees they'll climb some more. What worries people is we don't know where this ends and that the administration doesn't seem to have an eye on the problem, instead celebrating an Inflation Reduction Act in an environment where inflation isn't being reduced at all. It's getting worse, and it could get prohibitively more so. To Kevin Hassett, the former White House Economic Council chair for Donald Trump. Kevin, good to have you. Across the board, This was a worrisome inflation report, and I'm just wondering if that's resonating because I don't see it at the White House today.
Right. I think that what you're seeing in markets is really a response both to the inflation report and to what's going on at the White House. The fact is that getting inflation under control, it's easiest when you've got fiscal and monetary policy working together. And right now, the administration is clearly in denial about the inflation that's spinning out of control. But let's just put it in the simplest possible terms. If you look over the last 12 months, inflation north of 8%, has made it so that the typical American family has to spend $460 a month more than they spent last year to get the same stuff. And if they don't have higher wages, if they don't have that $460, then their consumption goes down, GDP goes down, and so on. And that's why we're in a recession. If you look at the numbers, we've got 2 negative quarters. And with inflation this high and that kind of $460 demand on America's consumers, it doesn't look like there's any turnaround coming soon. And so, yeah, I think that the market is probably 50% down because of the inflation report and 50% down because of the really, really Kafkaesque picture of what's going on at the White House today. I never, ever at CEA would have allowed the president to celebrate, the change in inflation on a day when the CPI was coming out. It's just a recipe for the kind of disaster we're seeing.
I'm thinking, Kevin, and if Ronald Reagan had done this on October 19th, 1987, when the Dow lost a quarter of its value in one day and was ending with a Rose Garden celebration of the economy, it would be, shall we say, awkward. Nevertheless, this plan is going ahead, and the president is still trumpeting the economy and his Inflation Reduction Act. It's just out the chute, but if it's like any other spending initiative here, it will have quite the opposite effect. And the environment that he ignores, he does so at his own peril, does he not?
Yes, he does. And again, to go back to the thing that you mentioned before about the Fed, you and I have talked about this on your show recently, that I think Jay Powell clearly signaled that he's serious about inflation. Inflation, as we see today, is not going down anytime soon. And so I think what that means is that not only is the Fed going to give us, I think they'll give us 3/4 of a point at the next meeting, but I think they're going to do that at least 2 more times this year.
But they're the only game in town, right, Kevin? They're the only game in town. So they're going to respond to this by continuing to hike rates, and maybe a lot more than we earlier thought. They've already indicated a couple of weeks ago that they're more likely to stay at these levels and see how things go after that. But I'm wondering, and you said if you were advising a president or President Trump when you worked for him, with a backdrop like these markets, not to have an event like this president is having, I'm wondering, this president, we're told those around him do not focus on the markets, not very keen on obsessing with them. Then he said Donald Trump was and did. But the fact of the matter is you can't ignore them either, and you can't dismiss what they seem to be telegraphing. What do you say?
Right. I agree with that. And I think that if you go back and look when I was appearing out in front of the White House during the COVID crisis, and we were talking about what we were going to do to offset the shutdowns, and signaling that GDP was going to decline by the most since the Great Depression, way before that number came out. We were doing that because markets want to see that the Treasury Secretary and the White House understand what's going on in the economy and they have a plan to deal with it. Right now, what we're seeing is this weird counterfactual celebration about an Inflation Reduction Act that's not going to reduce inflation while inflation's spinning out of control. And frankly, that kind of disconnect is something I've rarely ever seen in economic policymaking. And I don't think that we're anywhere near a bottom even today. Once people really start to digest what's going on, and both in that report that the Fed that has to lift rates at least probably 3 more times to get ahead of the curve on this, and the White House isn't going to help them at all.
I do wonder where we go from here, though, because the one thing that this economy has had going for it, and still does, not to the degree it did, is a very strong job market. But of course, we've been seeing more layoff announcement. Goldman Sachs, the latest to hint of maybe a few hundred folks losing their jobs as soon as next week. But we're beginning to see it in companies like 3M. Again, the job growth is still the story, but it's not as promising a story. In other words, that is slowing. So that gives us a bit of a cushion here. But in that strength comes a consumer that so far is still willing to spend more. But there's a limit, isn't there?
Right, and you hit actually the nail on the head from some data that we haven't discussed yet that just came out. But one of the things that's happened, right? So think about where do you get that $460 so that you can keep consumption where it was a year ago? A lot of people don't have that kind of money. And one of the things that has happened over the first half of this year is that consumption has been held up by all of the stimulus monies that were sent to people. But there's clear evidence in the latest data that we get from the Fed that net worth is down about $6 trillion over the last quarter, and that consumer indebtedness is increasing rather rapidly. And that suggests that the cushion that people had from the money left over from stimulus checks is gone. And once again, if you got to spend $460 more to get the same consumption, if you don't have the $460, your consumption goes down, and that's when you're basically in recession. And so we're looking at really negative numbers coming. And the final thing is, going back to the Jackson Hole meeting, the most important academic paper there basically said that inflation gets out of control when people are convinced that the fiscal authorities, Joe Biden and the Democrats, but governments like them around the world, are not going to do anything about the government debt, and they're just going to sit back and pray that the central bank inflates the government debt away. And I think that what you're seeing today is a really, really negative celebration in that regard, because we're basically telling people, hey, we're going to spend money like crazy, and we're going to call it inflation reduction. And that's the worst possible thing that you could signal to markets right now.
And a number of former Democratic top administration consultants and administrations that were not Republican have been saying pretty much the same. Kevin Hassett, thank you very, very much.
Hi, everyone. I'm Brian Kilmeade. I want you to do me a favor. I want you to click to subscribe to the Fox News YouTube page. This is the only way that I know for sure that you're not going to miss any great commentary, any great news bites, any great interviews coming your way on Fox. You can get it all here on YouTube. So subscribe right now.